Hello viewers, welcome to my channel. I'm Hasham Ali Khan. This is the second video of chapter number 1, Theoretical Framework of Accounting for CA Foundation. Last video I have explained you about the meaning, definition of accounting, accounting process, functions of accounting, objectives of accounting. Now in this video I am going to explain you about the differences between bookkeeping and accounting, and the subfields of accounting, then users of accounting information, a relationship of accounting with other disciplines, and next limitations of accounting and role of accountant in the society. These are all the topics of first chapter, where in examination you may get a theory question. Remember, accounting is not based only on problems. A professional student must be perfect about the theory, because this is the foundation of accounting. Without understanding the theory, we should not go simply to solve the problems. So always I stress my students to have some patience in watching, in listening, in understanding the basic fundamentals of accounting. Right? So before proceeding further, take the screenshot of the points which I have written on the board, then I'll explain every point in detail. Now, first of all, very frequently asked in examination is the question regarding what are the differences between bookkeeping and accounting. Many people think that both are synonymous. Bookkeeping and accounting are one and the same, but in reality it is not. There are many differences between bookkeeping and accounting. The bookkeeping is process concerned with the recording of transactions. Simply recording the transactions in the books of accounts is called bookkeeping. Whenever a transaction is conducted, first of all it should be recorded in the primary books. That is journal, subsidiary books. That part is bookkeeping only. Apart from that, after recording the transaction, it has to be posted to ledger accounts called classification. That also comes under bookkeeping. But accounting is concerned with. Accounting is a very wide concept which includes bookkeeping. Apart from bookkeeping, analyzing, interpreting, communicating the financial information. So simple words, bookkeeping is concerned only with recording the transactions, whereas accounting is concerned not only the bookkeeping but also analyzing, interpreting, communicating the financial information. Second point is bookkeeping constitutes as the base of accounting. That means the first step in accounting is bookkeeping. So without bookkeeping, no accounting. It is the base. Whereas accounting is considered as a language of business. The business will communicate with different parties by using accounting. By seeing the accounting, we can be able to decide about the performance of the business, about the position of the business. So it is called the language. Now, financial statements do not form part of bookkeeping. The financial statements which are prepared will not come from bookkeeping. The financial statements will come from accounting. So bookkeeping only base of accounting. After bookkeeping, the accounting will start. And from accounting, we can be able to prepare the financial statements. The managerial decisions cannot be taken with the help of bookkeeping. Ultimately, this accounting is meant for management. So management cannot be able to take any decision on the basis of bookkeeping. Management can be able to take the decision on the reports prepared by accounting. So accounting is a very wide term. Then there are no subfield of bookkeeping. There are no branches or subfields or different types of bookkeeping. Only one type of bookkeeping. Whereas in accounting, we have different subfields. Different branches of accounting are there. Financial accounting, management accounting, cost accounting, human resource accounting, social responsibility. Different subfields are there. But Financial position of the business cannot be ascertained through bookkeeping. What is the financial position of the business? What are the assets? What are the liabilities? We cannot be able to know simply from bookkeeping. We can know the financial position of the business organization only from accounting records. That's all. These are the differences between bookkeeping and accounting. So after watching, after listening this lecture, definitely you can be able to understand and you can be able to write in examination regarding differences. Next topic is subfields of accounting. Over a period of time, the accounting has been divided into different fields. Earlier, only one accounting was there, that was financial accounting. The oldest form of accounting was financial accounting. But later on, as the business becomes more and more complicated, so much of specialization is taking place. That's why we have different fields, subfields of accounting. One by one we will discuss. First of all, financial accounting. The oldest form of accounting is the financial accounting. Financial accounting means recording the transaction in the books of accounts in order to prepare the financial statements. The financial statements are profit and loss account and balance sheet. The profit and loss account is prepared to ascertain the result, the performance, the profit or loss during a period of time. Whereas financial position, this can be known by ascertaining what are the assets and what are the liabilities at the end of the year. So this financial accounting is kept mainly with the objective of preparing the financial statements, profit and loss account and balance sheet. That is financial accounting. Second comes management accounting. Management requires information to take the decisions. The main function of the management is planning, controlling, coordinating, communicating. These are the functions of management. To perform the functions of management, management needs information. So this information should be generated from accounting. So a new branch of accounting was developed called management accounting, which is concerned only with supplying or giving the information to the management, so that management can be able to take prudent decision, prompt decision, timely decision. So this management accounting is for internal purpose, whereas financial accounting is for everyone, internal as well as external. The financial accounting will give the information to the management and also it will give the information to outsiders, for everybody. But management accounting is concerned with supplying the information internally to the management. Whenever management requires information, the management accounting has to collect the information, modify the information, make the reports, make the statements and supply the information to the management. The scope of management is very wide because we don't know what type of information is required by the management. The management may require the information about finance, about cost, about taxation, about internal control, about budget. Different type of information management requires. So accountant has to supply. So simply, accounting for management is management accounting. Next comes cost accounting. Nowadays, cost is very important for every organization because it is required to ascertain the cost and to control the cost. See here, the selling price depends on cost. So it is required that correctly the business has to ascertain the cost. Without ascertaining the cost, we cannot fix the selling price. And apart from that, the cost has to be controlled. If there is no control on cost, the cost will increase, profitability will come down. So a new set of accounting has been started called cost accounting, which is concerned with ascertainment of cost and control of cost. How much is the cost of production? How much material? How much labor? How much other direct expenses, indirect expenses? All the cost reports will be prepared by cost accounting. Social responsibility accounting. The demand for social responsibility accounting stems from the social awareness that business organization will also incur social cost and it will give social benefit. An enterprise is a part of the society. It is consuming the resources of the society. So it is the responsibility of the business to give some benefit to the society. So how much cost the business enterprise is incurring and how much benefit, social benefit, like employment, like contributing to government for infrastructure, like education, health. In this way, what are the services given by the business organization to the society and how much cost it is incurring? That is called social responsibility accounting. Human resource accounting. Human resource accounting is concerned with identifying, measuring, and recording the investment made in human resource. Because human resource is a main factor of production. That means in every organization, human resources are used. So how much investment the management is making on human resources. So recording these human resources is human resource accounting. Because actually the conventional accounting will not disclose the full explanation about human resources. So separate accounting. These are some of the subfields of accounting. Now, users of accounting information. In the previous video, I have explained you that accounting has to serve different parties. There are different stakeholders of the business. Every stakeholder has some interest in the business. So who are the parties? Who will use the accounting information? First of all, investors. There are many investors. They are the risk capital providers. They are the risk capital providers to the business. So they want the accounting information to decide whether to purchase the shares, whether to hold the shares, whether to sell away the shares. So if an investor is there already invested in the company, he has to take the decision whether he should carry on as an investor, shareholder, or should he sell away. To take the decision, accounting information is needed. So not only for this company organization, limited company, but also even non-corporate enterprises also require the accounting information to decide whether our business is performing good or not. If the business is not performing good, they have to take the decision to wind up the business. That's why every investor is interested to find out the performance of the business by using accounting information. Secondly, employees. Employees are also interested in the accounting information because the growth of employees depends on the growth of the organization. If there is stability, if there is growth in the organization, then definitely the employees will wholeheartedly work in the organization. They will never think of going out. The employees wants the stability of the organization, profitability of the organization. Then only the employees. The employees are getting the remuneration, salaries, bonus, incentives, retirement benefits. All these are the benefits which employees are getting. So if the organization performs good, there is stability, there is future about the employees. The employees are also interested in the accounting. Next comes lenders. Example, bankers or any other lender to the organization. They are interested in the business because they want their money back. They have given the loan. Example, bank has given the loan to the business. The bank wants to recover the loan amount along with interest. So how the banker wants to know the accounting information of the business? On the basis of that accounting information, the banker will decide to give the loan or not. Similarly, suppliers and creditors. The suppliers will see the performance of the business on the basis of which they will supply the goods. Creditors, we can call them as suppliers or creditors. So before supplying the goods, the creditors will evaluate the performance of the business, whether the business profitability, liquidity is good or not. If the organization's profitability, liquidity is not so good, supplier will not supply the goods. They are also interested in accounting. Next comes customers. There are many capital goods customers. For example, ABC company will purchase the raw material from XYZ company. So XYZ company is the supplier of goods to ABC company, which is using the goods in their production. Now, ABC company depends on XYZ company. If the XYZ company is financially strong, then ABC company will think that there will be no interruption for our production because our supplier XYZ company is good company. So one company depends on another company. ABC company is the customer of XYZ company. If XYZ company is performing good, then automatically ABC company will also perform good. In this way, customers are also interested in the accounting information of the enterprise. Government and other agencies. Now see, the government will regulate the business organization for public good and also to control the prices. In the same way, the government will impose the excise duty, taxes, etc. on the business organization. The government is also interested in the accounting information of the business to apply the taxes, to apply the rules, regulations, to control the prices, etc. Apart from government, there are many government agencies are there which will instruct the companies to follow the rules. Next comes public. The public is also interested in the company because the resources of the public are invested in the company. If the company performs good, if the business organizations perform good, they will be good to the public. So public also have an interest in the organizations. Then management. Last but not the least, management is the driver of the business. Management has to take the decisions every day. Many decisions they will take. For taking the decisions, management needs information, and this information will be provided by accounting. So management is also one of the stakeholder, user of accounting information. So these are some of the users. Next comes the relationship of accounting with other discipline. Accounting has a close relationship with other fields, other disciplines. An accountant, to perform their functions effectively, must have the knowledge, working knowledge of other disciplines. Because there will be some overlapping of information between different disciplines. The accountant must know how we can be able to use the other disciplines in accounting. So what are the relationship? First we are discussing about accounting and economics. Economics is a science which is concerned with satisfying human wants in scarcity of resources. How to satisfy the wants when resources are limited, scarce. That is economics. So there are some areas in economics which can be used by accountant. So accountant must be able to understand the economic laws. Sometimes the accountant has to use the economic laws while performing the accounting function. Secondly, accounting and statistics. There are many statistical methods, techniques which are used by accountant in the performance of his functions. Example, many times the accountant has to calculate the averages. Many times the accountant has to find out the relationship between two variables. Like that, statistical techniques, statistical methods will be used in accounting. So accountant must be aware about the working, knowledge of statistics. Next come accounting and mathematics. Accountant must know little bit mathematics. He must know about algebra. He must know about other fields of mathematics because he has to make the calculations. Example, an accountant has to calculate the interest, annuities. He has to calculate the depreciation. He has to calculate how much amount to be set aside for redemption of debentures. how much amount to be set aside for replacement of machines, for lease accounting. For all these purposes, some mathematics is required by the accountant. So there are many areas, overlapping areas where accounting and mathematics are same. Next, accounting and law, very important. Every organization works under a legal environment. There are different laws applicable on the businesses. Example, when the business makes the transaction with customers, with suppliers, so they have to enter into contracts. So an accountant must know the Contract Act, Sale of Goods Act, Negotiable Instruments Act. These are all the law which are applied on every business. So as an accountant, the accountant must know what is Contract Act, what is Sale of Goods Act, what is Negotiable Instrument Act. Apart from that, the organization itself is created from law. Example, a limited company is incorporated under Companies Act. Every company is governed by the provisions of Companies Act. So an accountant must know the provisions of Companies Act. How to form the company, how the company will be liquidated. So there are many areas of overlapping areas between accounting and law. Every accountant must be clear about the law. Then accounting and management. See here, management requires different types of information. So actually, what are the functions of management? Planning, organizing, controlling, coordinating, communicating. All these are the functions of management. Accountant must know what are the functions of management. Then only accordingly the accountant can be able to supply the information to the management for taking prudent decisions. In this way, these are the relation of accounting with other fields. In examination, you may get a question regarding explain how accounting is related with other fields. If you watch this video, if you listen the lecture carefully, definitely you can be able to write in examination with full confidence. Next, limitations of accounting. Some people think that accounting is completely perfect. Once accounting is made, then automatically we can be able to get how much profit the company has earned. How much profit the company has earned, what is the position, financial position of the company, easily we can get, accurately we can get, but it seldom happens. The accounting is a language, so every language will have their own limitations. Accounting is also a language, it has its own limitations. What are the limitations? The first limitation is only monetary transactions are recorded. A business success, a business performance not only depends on monetary transaction but also many non-monetary events also. Example, the skill, the loyalty, the efficiency of the employees will contribute to the success of the organization. But unfortunately, the loyalty, the efficiency, the honesty cannot be measured. So those events cannot find any place in accounting. Only those transactions which can be measured in terms of money will be recorded. Non-monetary will not find any place. That is one of the limitations. Secondly, concern only with historical information. Accounting will record whatever had happened in the past. The accounting will not record any future forecasting, future expectation. It will record whatever had happened in the past. That's why it is called post-mortem accounting, because it depends only on historical data. Changes in the value of money, inflation is not considered. Inflation is universal phenomena. In every country we will find inflation. Rise in the price of goods and services due to the value of money decreasing. That is inflation. In accounting, we record every transaction in terms of money. But money itself is unstable. The value of money is not same. For example, a machine is purchased, suppose 5 years back for rupees 1 lakh. Another machine current year purchased for 50,000. So what we will do? We will add up 1 lakh rupees of machine purchased 5 years back and 50,000 rupees of machine purchased current year, we add up and tell 1,50,000. But it is wrong. It is not correct, because the value of money 5 years back and the value of money current year is not same. It is different due to inflation. But in accounting, we simply add up. We simply add up the value without considering the value of money. That is one of the limitations of accounting. Next come conflicts of accounting principles. Accounting is based on some concepts, conventions, principles. But there may be some conflicts among the principles itself. One principle says something, the other principle says a different thing. And for example, consistency principle says that accounting principles should be consistently followed. But another principle, according to prudence concept, it says that we can change the consistency concept to give more and more better picture. That means there is a conflict between consistency concept and prudence concept. Like this, there are many conflicts among the principles of accounting itself. Next, certain accounting estimates depend on personal judgment of the accountant. Accounting is not a pure science. It's a diluted science. Because in accounting, the personal judgment of the accountant will be applied in making the estimates. Example, depreciation, provision for doubtful debts, making provisions. For all these things, it depends on the judgment, personal judgment. Subjectivity will enter. So when subjectivity enters, definitely it is not so reliable. It's not so reliable because it depends on the perception of the accountant. So this is one of the limitations, that subjectivity will be there in accounting. The accountant has to apply his own personal judgment. Then different accounting policy may be adopted by different organizations. There is not a single accounting principle. Different accounting methods are there which are applied by different organizations. When different organizations apply different methods, we cannot be able to compare. For example, one business organization follows straight line method of debt. The other business organization will follow reducing balance debt. In both the cases, we cannot be able to compare. One business follow a different method, the other business follow a different method. We cannot adapt. We cannot be able to compare it. So these are some of the limitations. These are some of the limitations of accounting. The next topic is regarding the role of accountant in the society. How the accountant is serving the society. So role of accountant in society. An accountant plays a very important role in the society, because an accountant has acquired his education, his training, his analytical mind, his experience. All these things the accountant will apply in providing the service to the society. So what are the services an accountant will give to the society? That means to provide multiple need-based services to the ever-growing society. So as the society is expecting a lot of needs from the business organizations, so an accountant will play a very important role in the society by providing the need-based services of the society, by applying his own education, training, analytical mind and experience. All these things the accountant will apply in providing a better service to the society. The accountants of today can do full justice, not only matters relating to taxation. Earlier, that means nearly 20-30 years back, when the business was not so complicated, the accountant's scope was very limited. Only recording the transaction, preparing the financial statements, then analyzing the financial statement, communicating, that's all, finished. But nowadays, due to the complications of the business, due to specialization of the business, due to a lot of innovations taking in the financial sector, the accountant's activities have also changed. So earlier, they used to perform the taxation, costing, management accounting, financial layout, company legislation and producers, but they can serve the field relating to financial policy. So these are the old functions of accountant. The accountant will help in maintaining the accounts, in costing, in management accounting, in taxation, etc., etc. But nowadays, the scope of accountant has increased. It is giving much more than the earlier, scope to the society. So what are the new activities of the accountant, a chartered accountant will give to the public? The budgetary policies, financial policies. That means finance is a specialized activity. How to utilize the financial resources effectively. Many organizations collapsed due to bad financial management. So an accountant will help the organization in effectively utilizing the financial resources by making financial policies. So in this case, the chartered accountant will help the management in making financial policies. Similarly, budgetary policies. Budget is a plan of activities to be performed in future. So the first function of management is planning, deciding in advance what should be done in future. So planning requires making budgets. A budget is a tool and technique of planning, forecasting. So chartered accountant will help the management in making this budget, in making budgetary policies and even economic principles. How to effectively utilize the resources of the business organization. In that area, the management, the chartered accountant will help the business. Then some of the services rendered by accountants to the society are presently the services provided by chartered accountant to the society are innumerable. We cannot count that these are the only services which are provided by chartered accountant to the society. Innumerable services, infinite services are there, but few very important services rendered by chartered accountants to the business organizations, to the society, are maintenance of books of accounts. The chartered accountant, the accountants will help the business organization in correctly, systematically maintaining the records of the business, preparing the financial statements, preparing the profit and loss account to find out the true profit during the year. Similarly, an accountant will help the business organization in making the statement of financial position, that is balance sheet, how much of the assets, how much of the liabilities, so that the balance sheet should show a true and fair view of the financial position as on a particular date. Then statutory audit. Every company, every limited company is mandatorily required to conduct statutory auditor either by a chartered accountant or by a firm of chartered accountants. The chartered accountant will check all the accounts and see whether it is true and fair view, whether accounts will show a true and fair view. In this way, the statutory auditor has to give a report that according to his inspection, according to the information provided by the organization, the accounts are showing a true and fair view. The financial statements are showing a true and fair view. These reports have to be submitted. Then who will make the statutory audit? The chartered accountant. The chartered accountant will provide the service, right? Not only for limited companies, but even for non-corporate sector. The other organization like sole traders or partnership, they will get their accounts audited according to some other law like income tax. Then internal audit. It's the audit which is conducted internally by the management so that all the accounts should be up to date, accurate. Statutory audit is mandatory, whereas internal audit is optional if the management wants as a service to the organization. That if an accountant is kept to internally audit the accounts before final audit, it will be helpful to check if the errors, if there are any frauds or misappropriation taking place, immediately they can be able to take the action. Otherwise, if no internal audit is conducted, they have to wait till statutory audit. Till that time, a lot of destruction may happen. Next, taxation. Now, chartered accountants will help the organization in tax planning. The chartered accountants are perfect in the taxation laws, so they can be able to help the organizations. They will provide the services, how to minimize the taxation, how to make the tax planning, how to take the advantages from the tax provisions, how to timely comply with the taxation laws. Next one, management accounting and consultancy services. Many chartered accountants are providing the consultancy services to their clients. The clients are the business organization. They will consult these organizations in many matters. So management accounting and consultancy services, these are the services provided by chartered accountant. Next one, financial advisors. Many a time, financial decisions has to be taken by the management. For example, a management wants to merge with another company. A company wants to acquire another company. A company wants to set up a new branch. For all these financial decisions, the management need the expert advice from chartered accountant. So they will approach the chartered accountant, they will take the services, financial services from the chartered accountant. This is also one of the area where chartered accountant will provide the service to the society. Next one is secretarial work. So many organizations, they need the perfect secretary so that everything is going on according to law or not. So for that purpose, the accountant will give the service, secretarial work. Then share registration work. Nowadays, when the company expands the number of shares, the share capital will increase. The registration of shares, transfers of shares, it's a very complicated matter. Only a chartered accountant, a professional accountant can perform the activity of registration of shares. Next one is company formation. See, a company formation requires legal process. A number of documents has to be prepared, submitted to the law. Apart from that, number of compliances has to be made. So it's not an easy job to form a company. The professional accountant will give the service to the society, to the business organization, how to start a company, how to form a company, formation of company, what are the documents required, what are the legal provisions to be complied with. All these services a chartered accountant will provide. Lastly, company liquidation. As the company is formed by the provisions of law, the same company can be liquidated by the provisions of law. So if a company wants to be liquidated, the chartered accountant will help the company how to liquidate the company. So these are some of the services provided by the chartered accountant, by the accountants, professional accountants to the society. But these services, what I've explained, don't think that these are exhaustive services. No. These are only few services which are provided by professional accountants to the society. Apart from that, innumerable services are there. So by using his education, training, analytical mind and experience, he can be able to serve the society in different ways. So far, 2 videos I have completed on theoretical aspects, theoretical framework of accounting, first chapter. This is the end of the theoretical part. In the next video, I'll explain you about the short questions regarding true and false questions and MCQs. Because in examination, you will get few questions to say whether true or false. That I'll explain in the next video. So if you're satisfied, give a like to the video, share my channel among your friends, among your group, so that more students can watch the video and enhance the knowledge. Subscribe my channel if you have not yet subscribed. Give your comments. And lastly, buy the super thanks which is given below my video. Inshallah, we'll continue the next topic in the next video.